Hi there, thank you for viewing this week's video. Let's look at the indices and check out how they have performed, also the outlook for the upcoming week. First, let's do a quick discussion on the market performance last week. The markets began with a positive movement, anticipating good corporate results and hoping that the results can help to overcome the inflation and interest rate fear. However, things start to turn sour after Netflix announced their result as they lose a subscriber for the first time, right? Blaming the fact that the accounts were being shared. Ironically, HBO announced later on that they had an increase of subscribers. The results stunned the market as they took it as an indication of an early recessions, and the market crashed. Then come Tesla to the rescue. The EV maker has announced a stunning set of results and a rosy outlook which helped the market to rebound for at least 3 hours. Then come Powell, the real deal maker, as he suggested 0.5 basis point increase in May. Not only all the gains had been erased, but more points had been lost. Then the week's finale, the big atomic bomb. Out of sudden, the news of ex-smart traders anticipating a 0.75 basis point increase instead of 0.5 was released. The market capitulated. The Dow was down almost 1,000 points on Friday. Ironically, in the forum report of the market, they term that dropping 0.84% is considered as the biggest gainer. S&P 500 was down more than 100 points on Friday, and NASDAQ was only down 300 plus points though. Nowadays, NASDAQ down by 300 points is considered as norm. In Chinese, we say it 家常便饭. Now, going to the Asia market, the STI is the best performing global market as it ended the week higher, while Hang Seng, as usual, lackluster, filling up its gap that was anticipated earlier, and next week maybe even more worse. From here, let's take a look at the performance charts. Okay, so you can see how the global market nosedive over here, with the blue line being the Dow, the red S&P 500, and the NASDAQ composite, the green. We can see that it is almost a one straight line down with very little rebound. Okay, and then we have STI, the best performing index as it ended the week higher. Now, if we were to look at a bigger time frame, well, as I mentioned earlier, in earliest video, the April this year will be something different, and true enough, we are locking in on a bad month for April, and this rewrote the history as historically April was a fantastic month, but this year the market, like I say, rewrite the history, and then we ended lower in April. Now, if we look at the whole year performance year to date, with reference to 3rd of January over here, we can see that NASDAQ is closing in 20%, down 18% so far, approximately. And S&P 500 is almost 12% down. And then we have the Dow closing in 9%, and Hang Seng is down 11% after some recovery from the 20% down. Okay, STI is still up by 7%. So, in many years, for the past 10 to 15 years, we have been condemning STI badly, as it has always been the last in the list. But this year, finally, we score #1. Okay, so all thanks to the market. Okay, so let's take a look at the chart now. We are going to the Dow. So let's turn on the Dow here. Right, this year indeed is a tough year as the almighty April was a down month, rewriting the history as I mentioned earlier. Since month to date, the Dow has been down, as you have seen, and the index has broken its major support, or one of its supports on Friday. If you recall last week, I mentioned that if the Dow can hit 35090, it can retest this resistance at 35391. So it tested it momentarily, only to erase the gains as Uncle Powell opened his mouth. And of course, Friday came the capitulation as the market start to act smart. And of course, shorties having its funds. So thanks to Powell, Biden, and the support of the shorties, the next support at 33499 is in sight. And of course, testing that support or breaking it can means that the support zone over here at 32260 to 32549 may be tested. And remember this, in the bear market, support breaks. So if support keeps breaking, this is where shorties is having their fun and hoping for more and more support to break. As such, bringing the market to a recession. So is this a start of a depression? High inflation, high interest rate, bearish market, poor result, nothing the global market seems to be able to do to reduce the commodity prices, which causes the high inflation. Now let's move on to S&P 500. Nothing much to say, but as you can see from the chart here, it is a downtrend where we can see lower high, lower low, with S&P ended the week testing its support at 4281. Okay, so this is a downtrend, and if it continues, the support here at 4153 is crucial, major support, I would say. Next, let's look at the NASDAQ. It is a bearish chart. As you can see here, we can see that the lower high, lower lows as well, with the index moving towards this vital support over here. Okay, and with Netflix stunned the market need to have more good results in order to show that the Netflix event is just a one-off. So next week, Microsoft, Google, Apple, they are coming out with their results. And then this is crucial. The results is crucial for the market to turn around. Tesla has done their bit, but the result from the Microsoft, Google, and Apple can help to chart a new course for NASDAQ. However, if the results are bad, the path for NASDAQ is clear. Downtrend is going to continue. The major support over here may not be able to hold. So it's going to be a crucial week next week. And let's move on to STI. I am somewhat proud to announce that our index ended the week higher, thanks to the announcement of further easing of the COVID rules. And we are looking at a 1.6% up. However, if the index is affected by the sell-off in the US market, the gain may be erased, and we might be testing this support at 3302 next week. As you can see, the lower shadow from this candle is moving towards the direction. But the announcement, I believe, was released during lunchtime of the easing, where there is no longer numbers of what we call the like the number of 10 in the groupings is in place, if not wrong. So all is able to go back to office coming May. So this helped the index to rebound strongly and close higher. But if we were to go back to 3302 because of the US and break below that, yeah, we can go on downtrend as well. So moving to Hang Seng. Hang Seng continue to move lower as anticipated. It broke below 20776 and fill up the gap over here as anticipated. Seems like there's nothing new. The downtrend continues. The market continue to be fearful of its government. But of course, the glimmer of hope is that Hang Seng managed to fill the gap with a white candle, seemingly telling us that the support may be holding. But let me tell you this, after many years of trading in the market, more than I started in 2006. When the market is bearish, whichever support you draw is kind of like hopeless because they tend to break it. Similarly, vice versa, when the market is bullish, whatever resistance you draw, they seems to break it. So wrapping up next week, overall charts are bearish. Increasing interest rates are inevitable, especially when the commodity prices are hovering at their highs. With the war raging on, the commodity price cannot come down. The Netflix result, as mentioned earlier, stunned the market. However, if it can be proven as one-off event, the market may turn around. The upcoming result announcement proves to be more important than ever. Yellen says that the Fed will try for soft landing, but obviously the market is not listening yet. The next Fed meeting is taking place the week after next on the 3rd and 4th May, and may be able to calm the market, but for how long? I think the key fundamental issue at hand is that stopping the war, restoring the market order, and then of course the return of the normal growth is very important. So can we see that in the near future? While we are looking at quite a stubborn politicians in the world so far. Okay, so I hope that the war can stop soon. Lesser killing, bring peace to the table. Okay, so I'll see you next week. Good day and goodbye.